Welcome back, everybody. We got some big dividend news as FEPI announces another juicy dividend. We also have another fund provider that offers some pretty good income ETFs. They might even be better than some yield max products, but they hardly get any love in our space. We'll talk about FEPI's dividend, we'll talk about what that income provider is, and we'll even talk about RexShares' new income ETF that I don't think you guys will want to miss. So let's get into it, guys. FEPI announces another dividend. This is the 8th dividend in their short history. But to nobody's surprise, it was another straight fire, another straight juicy dividend, $1.15. All of FEPI's dividends have been between $1.09, that was their lowest dividend ever, and $1.20, that was their highest dividend ever. All other dividends have been in that range. I love the predictability and I love the reliability of FEPI. FEPI is a position in my personal portfolio. There's a lot of trash income ETFs out there, but FEPI is clearly one of the superior income ETFs out there. It is one of my personal favorites. It might one day even be the greatest income ETF of all time. We're getting exposure to 15 fantastic tech companies. These are companies that are involved in so many big things. I'm talking about e-commerce, semiconductors, artificial intelligence, electric vehicles, computers, social media, phones, and so much more. Since their inception, since October of 2023, FEPI is up about 6.2%, but it's getting that much closer to now having a full calendar year under its belt and giving out a mouth-watering 25% annualized yield. To be able to do that with no NAV erosion is quite impressive. Not many funds can say that. And a lot of people are starting to wake up and smell the roses on FEPI. FEPI's assets under management, this is the total amount of money that's being pooled into this ETF, has rapidly been growing. At the start of February, this was just $60 million. Now, about 5 months later, they have increased fivefold to almost $300 million. So more and more investors are flocking to this gem. I had FEPI very high in my power rankings. It's not hard to see why, because they are consistent, they are reliable, and the strategy is working very well. What's not to love? They are owning big technology companies, they're writing covered calls on them, and that gives them enhanced income potential, aka big dividends. Now, some of you were saying I was collecting way too many SCHD or SKID gold bars, as if that was a bad thing to be collecting more shares of SCHD. But now I'm also collecting more FEPI gold bars. Now, one set of ETFs that I think investors are definitely sleeping on are the Kurv ETFs. They're doing some similar income strategies to get that monthly cash flow via options premiums, dividends, and interest income. This is a chance to get exposure to some capital appreciation in bull markets and possibly have a hedge in market downturns by profiting off of covered calls. Now, Kurv currently has 6 different ETFs, all with a 99 basis points expense ratio, but all have juicy double-digit dividend yields. They got funds on Amazon, on Apple, on Google, Microsoft, Netflix, and the good old Tesla, just like YieldMax. Now, I'm not necessarily saying they are better than YieldMax or any of those funds, but hey, it's always good to have more options out there, to have a different management team actively managing these options. I did do an interview with one of their executives, which gives way more detail if you are interested. All right, switching back to RexShares. They recently launched another income ETF this past week that has many investors very excited, and that is called AIPI, the RexShares AI Equity Premium Income ETF. Now, the strategy behind this one is pretty simple. They're owning AI stocks, and then they're writing covered calls on them. This allows for big dividends or big enhanced income potential. So rather than owning big tech, they're specifically owning specialized AI stocks and then doing covered calls. It actually follows the BITA AI Leaders Select Index, which is a rules-based index, and that gets rebalanced monthly, and then the companies that make up that index, they actually get swapped out every quarter. So the companies that make up the index, they are going to be microprocessor companies, they're going to be data centers, platforms, machine learning, autonomous AI, among many other companies. AKA, we're definitely going to have exposure to this AI boom that we're currently going through, and that is going to be quite profitable. I'll make a much more detailed video about this ETF in a couple months. Once AIPI has been out for a few months, we can see how the fund has performed for a little bit, and most importantly, we can see how juicy those dividends are. Now, I do anticipate some very juicy premiums due to the boom and bust nature of some of these companies, but just remember, that does come with some risk. And I don't know if AIPI will have the same success at not having NAV erosion that FEPI has had. This is because FEPI generally invests in some very well-established companies. I'm talking hundreds of billions of dollars in market caps, and they're very established companies that are less volatile. But only time will tell. We'll see how AIPI is doing in a couple months. Now, let me also be the first to set AIPI's nickname. It doesn't sound like many people liked my SCHD or Skitty nickname. That sadly has never picked up steam as much as I've tried to be a trendsetter. But I think I got this one correct, guys. Let me do this one much better. I really like the name AI Pie. Let's go with that. Now, guys, let me know in the comments, what do you think about FEPI's recent massive dividend payout? What do you think about the Kurv ETFs? And what do you think about AI Pie? Are you going to be investing in it? Let me know in the comments below. Thank you to all my Patreons who get full access to my full $200,000 portfolio. Make sure you leave a like before you head out, and I will catch you on the next one.